Welcome back to Lunch at the Market today, Tuesday the 20th. This is a busy time of the year for us. That's certainly no understatement for those who manage money seriously, as opposed to those who simply sell financial products. Those who sell financial products pretty much have the same schedule, that being filled with prospecting and paperwork. Our day this time of the year is filled with conference call after conference call. Let's get you up to speed on the conference calls for today so far. The day started off with Johnson & Johnson. I have to say probably the most downbeat of the day. Don't know if that's a management usual tone, but there certainly seemed like more negative than positive comments coming out of management, and the recalls and plant shutdown have a material impact on earnings, and the issues are not resolved yet. We would avoid J&J right now, even though their new acquisition of MEND is attractive. It may not be big enough to move the needle. Next, Weatherford, symbol WFT. Management command of the energy environment in general and their business in particular was extremely encouraging. We were really impressed with the call. They were open about the impact of Mexico and the drilling moratorium off the coast. They firmly believe that deepwater drilling will experience a secular decline thanks to BP catastrophe, and that several players will exit the space, those being smaller in cap size. They made a specific mention of PetroBras, symbol PBR, as a company that executed deepwater drilling operations exceptionally well. We'll actually recommend both PBR and WFT off this call. We refuse to give up our bullishness on the energy space, especially when you look at someone like PetroBras, which you can grab for $4 away from its 52-week low and have $18 to its 52-week high. We think the risk reward is there. Check out PBR and WFT. Then we had Goldman Sachs at 11 a.m. Their call was okay. Not really moved one way or the other. I do have to say their defense against one analysis to insisted on asking over and over about criminal investigations was handled extremely well. They are also clearly a global franchise that insists on going where the money is around the world, also a bright spot. They are committed to growing their different lines of businesses around the world. What may be said about Goldman Sachs, though, is that the expectations from the call were kept realistic, and we're looking at a 154 price target for now. If Q3 comes in better than expected, we get the sense that they're tempering expectations. We may rise it. From now, we think the stocks continue to have an upside, so we're selling calls against the long calls we own that expire in October. We'll have to go back and listen to both Blackstone and Peabody to see what we can glean from the private equity and energy space. Illinois' Toolworks, Stryker, Yahoo, and Apple are all coming up this afternoon. It's a busy day for sure. One quick note, Bank of America under $14 seemed a little too far on the downside for us. Take a look at January 2011 or 2012 $15 options, or you could entertain the January 2012 $10 calls for $5. Heck, you can outright get long on the stocks if you don't mind having a downside risk. But it's hard to imagine the most powerful mortgage machine in the country, thanks to their acquisition of Countrywide, and the fact that they do business with something like 1 out of every 5 Americans, will not benefit from this low interest rate environment for mortgages and high interest rate environment in credit cards. Thanks for tuning in today, and don't forget to do your homework and listen to those calls for stocks you own, or check us out on Twitter as we cover the calls for the names we own. Have a great day. We should have our next AFT interview sometime in the next couple weeks, so be on the lookout. Have a great day, and we'll see you tomorrow.